Blue to platinum. Jeremy Coombes is the General Manager at Platinum Specialist Johnson Matthey. And anyone who has any interest in the platinum market likes to watch what Johnson Matthey's forecast, projections, research pushes out. And it's not surprising because, Jeremy, Johnson Matthey is perhaps the specialist platinum company in the world. But why, if you're such a big refining business, a 50 billion rand market cap business listed on the London Stock Exchange, do you spend so much time researching this metal?
Well, because we've got a very strong long-term interest in this market. Johnson Matthey's been dealing with platinum for over 150 years, and we're working on technologies that we're not going to see introduced into the market for another 10, 15 years. So we want to know what the situation is going to be like when we have those technologies ready.
That would presumably be things like fuel cells.
Very much like fuel cells, yeah. We've got a budding fuel cell business.
People often talk about fuel cells, maybe in a nutshell. How might that change the way that our cars are powered in future?
Well, we might switch over from being powered by gasoline to powered by hydrogen and using fuel cells to convert the hydrogen into electric power. And we'd have cleaner cars, more fuel-efficient cars. But we're not there yet because a lot of development's got to be done, and a lot of costs have got to be taken out of the technology. But we're getting more confident that we're going to see this happen.
And they will be very platinum intensive, the fuel cells?
They do rely upon platinum for the operation of the fuel cell, yes.
Right now, though, platinum's biggest demand comes from auto catalysts. And I guess most people understand that that's something that goes primarily into diesel engines. How's the demand for auto catalysts at the moment?
It's been growing for several years. It's up again this year, and it is, as you say, because of diesel cars in Europe. Diesel cars are taking a bigger share of the market. They are running into tighter and tighter legislation being applied to their emissions. So as we approach the next phase of legislation, we're going to have to put extra catalysts on and filters on these vehicles to comply with the law, and this means more platinum.
Is there any impact, well, I suppose there is obviously an impact from the green revolution around the world?
Yes, but that tends to now focus on CO2 emissions. So a little way down the track, you might see diesel cars penetrating into markets where they don't really exist at the moment, like North America, where there's only about 3% of vehicles are diesel powered. And in Asia, there aren't many diesel cars. So longer term, there is more potential for using platinum in a greater number of vehicles.
So platinum investors should be watching how diesel vehicles penetrate those markets.
Watch the CO2 regulations. You know, the Europeans are talking about tightening up on CO2, and if they force that through, the car industry has to respond.
Onto the platinum price itself and the purpose of the review. Only a year ago, when you put together your last interim report, you expected that this year there'd be a excess of supply over demand of platinum, but in fact it's been the other way around. What changed?
Sure. Even as late as May this year, when we produced our previous report, we were still expecting a surplus to follow the one that we had last year, an increasing surplus of that. But what's changed is not the demand, which has gone up more or less as we expected, but the supply that's gone into reverse. And it's all because of the problems that the South African companies have met with, month by month through the year, which has not only pegged back the supply, but has given a lot of support to the price.
We've seen here in South Africa a big shake-up at Anglo Platinum, chief executive resigning, in fact the top 3 guys at the company resigning since the introduction of Cynthia Carroll, the parent Anglo American. Is what she implemented there likely to be just a short-term impact, or do you think the whole safety thrust is going to have other implications for producers?
Well, they have had implications so far this year. Now, there's an accident of the mine, and the mine is stopped. So you're not going to get that ore out, and you're not going to make up that lost production. So that's already hit the supply. Although I have to say, it's not the major factor this year. It's more to do with process problems where we've lost metal. But going forward, I think, yes, you've got to expect that there'll be more focus on safety, and if creating a safe environment means losing production, I'm sure that's a decision that's going to be made.
How far out of line are South African platinum producers with mining generally around the world when it comes to safety?
I don't think I know what the comparatives are there. A lot safer than Chinese mining, I know that. But probably there's more, I know there's more stress in North America on making sure the environment is absolutely 100% safe.
But if you're bringing a North American
executives are probably bringing their attitudes and philosophies into the market.
We heard when Anglo Platinum had its big expansion program that in fact that was the one thing you didn't have to worry about was supply of platinum into the market. Not only Anglo Platinum, but many of the juniors as well. Is that perhaps people must now start reworking the equation?
Well, we've done it. We've, given the situation this year, we've looked ahead and decided that we've got to make our forecast coming off a lower base now, and the rate of growth will be slower than we had expected. And I heard you talking earlier about Longmin's results, and they're now predicting a lower long-term target for their output. So these are going to take some effect and tighten up the market, I think, over the coming years.
Your price forecasts are very aggressive, it appears. We've only recently, in October, hit a new record for the platinum price, but you're expecting it to get through that record, through to over $1,500 an ounce.
I think that's quite possible it'll get there. It's based, to some extent, on the weakness of the dollar and the expectation that the dollar will remain weak or even get weaker. That the oil price will stay high, the gold price will go up again, and this will all lift platinum. But it's all underpinned by the fundamentals and the fact that we've got this shortfall, which is the 8th deficit in the last 9 years, means the market is a lot less liquid than it used to be. And so any instance or any suggestion that supply is not going to meet target in the future is just going to put another buy signal into the market. So a platinum price of $15.75 per ounce we think is potentially achievable.
Jeremy Coombes, General Manager at the Platinum Specialist Johnson Matthey. And remember, he's got no vested interest in pushing the platinum price higher. If anything, Johnson Matthey would like to see it a little bit lower. That's all, though, from Power Lunch for today. It's brought to you in association with MoneyWeb. We're crossing now to CNBC Europe for Power Lunch Europe with Louisa Boyson. CNBC Africa will be back at 4 o'clock Central African time with regional updates.